You always hear people talk about the Fed, but then sometimes people will say the FOMC. So, what's the difference? The Federal Reserve, or the Fed, refers to the entire U.S. central banking system. It includes the Board of Governors in Washington, D.C., and 12 regional Federal Reserve banks across the country. Together, they handle everything from supervising banks to managing the payment system to setting monetary policy. Now, the FOMC, or Federal Open Market Committee, is one specific part of the Fed, and it's the group that actually decides monetary policy, meaning interest rates, the target Fed funds rate, things like quantitative easing and tightening, which I talked about yesterday. And the FOMC has 12 voting members. 7 from the Board of Governors, the president of the New York Fed, who always votes, and 4 of the other 11 regional Fed presidents who rotate each year. So when you hear headlines like the Fed raised rates today, it's really the FOMC making that call, but they are part of the larger Fed system. So think of it like this: the Fed is the whole central bank, and the FOMC is the committee inside it that decides direction of monetary policy.